Hi, I'm Phil Grande, philsgang.com. Welcome to my YouTube channel. Also, this morning I did a little 1-minute segment for YouTube and for Instagram. You can catch that, but I told everybody I would expand on it because it's very important, because what I'm going to talk about is the Federal Reserve as to, if you want to get the answer, what do you think the market's going to do? You don't go to the Federal Reserve because they never get anything right. Here's Jim Rogers.
Well, Mr. Bernanke has been wrong for 400 weeks in a row now. He's never been right about anything.
Just ask you one thing. What worries you the most at the moment?
The Federal Reserve in the United States. I mean, they don't have a clue about economics or currencies or economics. They don't have a clue about much of anything.
Well, it's not they don't have a clue. They do have a clue. But they can't tell you the clue. They can't tell you the truth. Because remember, the Federal Reserve is not there to serve us, the people. The Federal Reserve is to serve the President of the United States and to serve his party. That's what it's for. It's there to make the very wealthy, the very, very wealthy, the 1/101%, not to be confused with the 1%, the 1/101% more wealth than they already are. And the 1/100%, they control everything. So the Federal Reserve, okay, they know exactly what they're doing, but they're not going to tell us about it. They're going to feed us a bunch of crap. Example, the other day, Powell came out and said there's not going to be a recession. Well, he knows that's a bunch of crap. And he also knows that we're not going to have a soft landing, we're going to have a stock market crash. He knows that too. He also fed us a bunch of crap when he pointed to, look at 2023, the market, the first half of 2023. Here, look at my chart. The first half of 2023, right here. And what's he saying about it? Well, he said in 2023, we had the best 6 months, first half, since 2019. Okay. He also said the NASDAQ at the same time had its best half. It went up 32%, the best in 40 years. He also said it's doing much better than we did in 2022. Well, that's not correct. Okay. Now, yes, the numbers are correct, but you got to understand it was financially engineered to do better in 2023 than in 2022, because remember, in 2023, everything was much worse than in 2022. So in 2022, we had the worst 6 months on record. In 2023, we had the best first half in 40 years. Well, it wouldn't have been that way unless it was financially engineered. So you understand what they did. At the same time, remember, you always know what's going on in the market if you follow the yields. Remember, if the yields are going up, that means things are going to be bad. If yields are going down, it's telling you things are going to be good. It's that simple. That's all you trust, is the yield, because the yield's not connected to anybody. Okay? It goes up and down on performance. Now, remember, the yield was telling us, if you go back and look at 2012 back here, to 2022, the yield, believe it or not, 10-year Treasury yield stayed between 1.6, 1%, 1.4. Mortgages were at 2%, 2.6%, 3.5%. It was a boom. And why did they do that? They did that on purpose because what they wanted to do is get money into the economy. They wanted to loosen money supply, which simply means get banks, print all kinds of money, give it to the banks, get it out in loans. They wanted to get the economy going. Well, the problem is you get the economy going by increasing productivity, not by dropping loans, not by dropping rates back to, keeping rates at 1.6%, 1%, so people can get cheap mortgages. Now, for a while, it feels good, it seems like the economy is good, but it's not. You have to pay for that, because underneath all those low rates, there's no good wages, there's no good productivity. It's all fake. But that's what the politicians want. They got to get reelected. So what happened was, in 2022, we had this crash. Because why? Because it was over. That game was over. All of a sudden, interest rates in 2020 into 2022, 2023 started to go from, let's say, 1.6% to 4%. Mortgages were going from 2.6% to 6%. Everything stopped. But now he's saying, however, we are going to have no recession. Well, wait a minute. If you're not going to have a recession or a crash, we're going to have a soft. How could that be when we've gone for almost 11 years with rates around 2%, mortgages around 3%? Now we got yields at 4%, twice as high, and we got mortgages nearing 7%. Everything's going to stop. The whole housing market's going to collapse. And remember, people overbought these homes. They paid too much for the homes. Everybody's out there running around trying to buy a home before prices go up. Of course, because rates were artificially kept low, 1%, 2%, mortgages 3.5%. But now it's over. But the stock market's going up. And Bernanke came up and said, don't worry, look at the stock market. He says in 2023, we had the best first half since 2019. In fact, we had the best first half, the NASDAQ, in 40 years. Much better than 2022. Well, that was a lie. I know the numbers are correct, but what he didn't tell you is that in 2023, we had worse headwinds than in 2022. So how did they make the numbers look so much better? They financially engineered them to go up. What did they do? They took the S&P, okay, and they, remember, 7 stocks have been driving this whole S&P. So they got the hedge fund managers, pension fund managers, insurance company managers, all got together and pulled $15 trillion and said, right here, because see, rates are going up now. See, rates are going up. They know the market can crash. So what they did, there's no more 1%, 2% yields, no more 2% mortgages. Now they know the market can crash. So they all got together and guess what? They funded the Apple and Microsoft with $15 trillion to push up the other 5 big tech stocks, that's the 7 magnificent stocks, to hold the market up. That's what they've been doing. Then on top of that, remember our banks in March collapsed. Our 3 banks, the Silicon Valley Bank, the Regionals Bank, and the Republic Bank, they all collapsed. So those banks, another 177 were ready to collapse. Well, how they propped that up? Well, they propped up the stock market. How can we prop up the banks? Well, they propped up the banks where they printed $2 trillion, started, and they named a fund, fancy name, Bank Term Funding Program. So there's $2 trillion to hold up the banks so they won't collapse, the 177 regional banks. So that's what this is right here. That's why the market's been going up when you now have rates not at 1.5%. I'm talking about the Fed. I'm talking about the 10-year Treasury. Rates not at 2.6, but at 4%. And mortgages hitting 7%. How the hell could the market go up 400 points when that's going on? Because again, of this financial engineering. Well, this is all going to end. You know, this is how great crashes start. Great crashes start like this because the big boys on Wall Street are pushing this market up one last time because they try to get out their pension funds. Remember, J.P. Morgan, Goldman Sachs, all those big boys, they take care of all the steel workers, the pension fund workers, the fire, the police. They take care of all those guys. So now they got to get them out. And that's why you're seeing the market going up, even though yields are at 4%, no more at 1.5%, and mortgages at 7%, no more at 3% or 2%. So this is how they do it. They push that market up, get everybody out, and once their clients are out, the big unions are out, then they pull the bid and the market crashes. So if you're buying a stock right now at the very top, especially tech stocks, you're out of your mind. What you should do, okay, is keep looking at the yields. The yields will tell you the truth. When you see the yields going up, it's telling you the market's going to crash, the economy's going to contract. That's what it tells you. Don't listen to them. Listen to the yields. Listen to Phil's gang. And join my gang so you can learn how to sell short. See, we short here, and we shorted here, we shorted here. At the same time, we bought on the uptrends. So we can do both. And one thing that we do that will help you, okay, is that our chart always works, okay, because we designed a chart that tells you right here. See, when it turns green, it's telling you money is coming in. See the sweet spot? Money's going in. When it turns red, it's telling you money's coming out. And if you're halfway in here, it turns yellow. It's telling you it's changing. Money's going to start coming out. So if you use our charts during your free 10 days, you learn how to short during your free 10 days. Even if you don't stay with us after the free 10 days, that's okay. All I ask you, use our knowledge, make some money, just help St. Jude once in a while. But I'm telling you, stop listening to the Federal Reserve, stop listening to Powell. They're not there to help you. We are, okay, and the yields are, but nobody wants to listen to the yields. Change that today. So go to my site, philsgang.com, go to where it says get started, click on, get your 10 days, use my color-coded chart that tells you when to buy so you can pick up these profits and when to sell short. Here, see, it's already telling us start shorting the airlines, and we did. We started short ALK. So that's what's going on. So that's a bunch of crap. Everything was financially engineered. Now, as I said, they're in their last big rally. That's how it works. They're going to get all the boys out, all the fire and the unions, all going to be out. When they get the last one out, they'll pull the bid, the big boys, and then you get your crash. See you on the charts, philsgang.com.